Thank you very much, Jody. Preston. Our speaker today, I have the privilege of introducing our keynote speaker for this evening. He goes by the name Jody Harris. Jody Harris actually retired from the Social Security Administration after 34 years of service. 10 of those years he spent as the public relations officer for the Social Security Agency. In his role as a Social Security consultant, he helps not only financial advisors, but also presenting Social Security solutions to clients. And he helps advisors to identify opportunities for retirement income planning as a whole. So without further ado, I give the mic over to our keynote speaker, our esteemed guest, Mr. Jody Harris.
Thank you, Simon and Preston, and glad everyone could join us tonight. We're going to try to learn a little bit about Social Security tonight, about the types of benefits that are available, talk some about where the program is headed. But the biggest thing I want to do is try to help you not make what I believe is the biggest mistake individuals make. I think that when you get ready to start your Social Security benefits, you need to be sure and work with your financial advisor and make the best financial decision for you. And don't make an emotional decision about Social Security. Treat Social Security just like you do your other assets. That's the biggest mistake that I think individuals make when they start with Social Security. They try to keep up with what's going on. They make an emotional decision and don't recognize Social Security as the asset that it is. We're going to spend a little bit of time talking first about how it started, but we're going to spend the bulk of our time talking about the types of benefits available, how to qualify, when you're eligible to file, and maybe some strategies or thoughts that you need to think about. And finally, everybody's favorite little thing, taxes. Social Security started in 1935. First payments went out in 1937. 1937, it was a really good system. The rules were somewhat different than today. In 1937, you paid the retired worker only. You did not pay benefits to a spouse. You did not pay benefits to any divorced individuals. You did not pay benefits to children. You did not pay benefits to survivors. You did not pay any type of disability benefit. You paid the retired worker only, and they had to be their full retirement age of 65 to draw Social Security benefits. So you had way more people paying in than were drawing out when Social Security began. Life expectancy in 1937 was 63. Remember, you could not get benefits until you were 65. So most workers never received a payment. They died before their benefits started. The ones that did receive a payment got it for just 2 or 3 years. Well, you jump forward to today, it's just not as good a system today. And a couple of things happen. One, of course, you're paying a lot more people today than you were in 1937. Today, you're paying benefits to the retired worker. You're also paying benefits to their spouse, to their children, to their ex-spouses. You're paying survivor benefits and disability benefits. Also, my generation did not have enough children. Think back to all of us baby boomers. We were born in the 50s and 60s, and households then had 2, 3, and 4 children. Well, you jump forward to the 80s and 90s, and households had none, 1, and 2. So my generation, we didn't put as many kids back in the front end. But the most significant thing that happened My parents did not cooperate by dying. They lived too long. They didn't live 3 to 5 years. Average life expectancy today is about 85, not 63. And an even more interesting statistic, if you're 65 today, there's a 1 in 3 chance that you will live to at least 90. So you have more people receiving payments, and they're receiving those payments for a longer period of time. So right now, there's more money going out than is coming in taxes. So that leads us to the crisis. All of you read the headlines in the paper when Social Security comes up that Social Security is broke, it's bankrupt, it's insolvent. Well, Social Security under the current law cannot go bankrupt. The current law already has provisions in place that will prevent that from happening. What the current law states is once there is not adequate revenue to pay all of the promised benefits, then everyone will take a reduction in benefits, a cut in pay, to reduce the payments going out to match the revenue available. Right now, there's 2.8 workers for each person receiving a payment. Within 15 years, they think now it'll be down to almost 2 workers for everyone receiving a payment. If Congress does nothing in the next 15 years, or 13 years, then there will not be adequate resources to pay all of the promised benefits. The current projections are that everyone will take a 21% cut in payments, and Social Security can pay 79% of the promised benefits for the next 75 years. That's if Congress does nothing in the next 13 years. Now, for the encouraging news, Social Security has got to this point before, and they had no issues. Happened twice in the past, and both times Congress took action to put additional revenue in the program to fully fund the benefits. I truly expect that to happen again before it gets to the point that payments are reduced. So I don't think you need to panic that, hey, my benefits are going to be cut. You just need to watch and see what action does Congress take to make sure there is adequate resources to fully fund the program. So where does Social Security fit in your retirement picture? On average, Social Security replaces about 40% of your pre-retirement income, on average. Some more, some less. But many or all of you, I hope, are going to have additional resources. They're going to have savings, investments. Some of you will have a pension, either a defined benefit plan, defined contribution plan. You may have annuities. You'll have life insurance. You may get an inheritance. You'll have resources coming from a variety of areas. Today, we're going to focus on Social Security, but remember, Social Security was never intended to be the sole source of your retirement income. It's just a piece of your retirement pie. So how much? Everybody asks, what can I get from Social Security? Well, if you paid maximum benefits over your entire life, paid maximum taxes, then you're eligible for the maximum benefit this year. It's $3,148 per month. That's the maximum. Now, most of you did not pay maximum taxes for 35 years. So another number you might want to think about is the average Social Security retirement check is $1,543 per month. So the average person is going to get about $19,000 a year from Social Security, which is a good base for you to start building your retirement plan on. Important thing to understand about Social Security is it is adjusted for inflation, although some make an argument that the inflation index that is used does not handicaps the seniors because it doesn't account for their expenses correctly. That's a political argument. Social Security benefits will last your lifetime. You cannot outlive your benefits. And the survivor benefits will continue after that if you have a spouse. So it may not be just your lifetime, but the lifetime of your spouse also. So how do we determine benefits? What do you control? What do you not control? Your Social Security payments are based on your highest 35 years of work. It is not like a private pension where it's your high 3, high 5, some combination like that. Social Security is looking at a snapshot of your entire lifetime of employment. To qualify for Social Security retirement payments, you need 40 credits. Some of you could remember maybe when it was called 40 quarters of coverage. Today it's just a credit. It's based on earnings. You get 1 credit this year if you have $1,470 worth of earnings. So if you have $5,880 worth of earnings in 2021, you have the 4 credits that you can earn this year. Once you have your 40 credits, then Social Security is going to look at your highest 35 years of work over your entire lifetime. Social Security counts 35 years. But to benefit you, Social Security does not use your actual earnings for most of those 35 years. Social Security takes all the earnings that you had before age 60 and indexes those dollars up to what a dollar is worth the year you turn 60. Everything from 60 forward will be actual numbers. Anything before age 60 will be a pretend number. And I'll give you a quick example. So you were starting benefits this year. 1975, you earned $10,000. Well, that was fair money in 1975. That is poverty level today. When your benefits were determined in 2021, you received credit for almost $63,000 for 1975 because that's the value of that $10,000 now. So you take all of your earnings before age 60 and index those up to current dollars. Everything from 60 forward is actual dollars. Pick your highest 35 out of that group of numbers, add them all together. Divide it by 420. 420 is the number of months in 35 years. That gives your average monthly wage indexed. Average index monthly wage. That goes into a benefit formula that gives you a benefit amount at your full retirement age for retirement. A question that comes up every now and then is, what if I didn't work 35 years, but I did work the 10 years to get my 40 credits? Well, Social Security still counts 35 years. So if you only work 10 years, they're going to add 25 0 years to your average, which is going to pull your average wage way down. So if you don't have 35 years, you're getting a 0 added in to get you to 35. Now, how do you know what you can get from Social Security? When you look at your Social Security statement, the easiest way to do it is to go online, click on socialsecurity.gov, then click on My Account or My Benefit. answer a few questions, and you can download your Social Security statement off of Social Security's webpage immediately. If you don't do that, if you don't do things online, once you turn 60, Social Security will start mailing you a paper statement every year. Or you always have the opportunity to call Social Security at their 800 number, 1-800-772-1213, and ask for a statement. If you wait until your full retirement age to start benefits, you receive 100% of your money. You get all of your full retirement amount if you wait to your full retirement age. If you start benefits early, you can start retirement payments as early as 62. Your payments are reduced. Benefits are reduced a fraction of a percent for every month you receive payments early. If you delay taking your retirement payments after your full retirement age, you can receive a bonus. The bonus stops at age 70. The bonus is 2/3 of 1% per month, works out to 8% per year. So you can decide, do I want it at my full retirement age? Do I want it early and take a smaller payment? Or do I want it later and take a larger payment? And it can make a dramatic difference. Full retirement age is changing. For those of you turning 62 this year, you were born in 1959. Your full retirement age is 66 and 10 months. For those born 1960 or later, your full retirement age is 67. If your full retirement age is 67 and you start benefits at 62, you're taking the maximum reduction, a 30% reduction. If your full retirement age is 67 and you wait to 70, you're going to get a 24% bonus. So you're deciding now, when do I start my payments? This is the key decision you will make, and it's what you control. You can't control what you worked and earned over 35 years. That's happened. What you can control is, when do you start your payment? So, for instance, if you were born in 1957, your full retirement age is 66 and a half. You do, say, $1,000. You start at 62, you get 716, where if you waited to 70, you get 1266. You can change your payment 76% based on the decision you make. And remember, the average male is going to live 19 more years. The average female is going to live 21 more years. So you need to be looking at this and meeting with your advisor and figure out what's best for you. Because people are going to ask me, what should I do? Well, the simplest answer is you should do what is best for you. There's no right or wrong answer. Some things you might think about. Do you need this money right now to eat? If you do, you're taking the check. Can you defer your Social Security payments? Do you want to defer them so they're higher and use other resources now? Or do you want to use Social Security now and protect your other resources? How's your health? What's your family history? What's your longevity? Does your family die at 74 or does it die at 90? Are you still working? That makes a difference. Are there other people that can receive payment when you start yours? Can you get a payment off of somebody else's record? A lot of moving parts that you need to consider and decide what is best for you. Once you decide you're ready to file for benefits, Social Security is going to ask you some questions to help determine, are there others that can receive payment off of your record, or can you get a payment somewhere else? So first thing you're going to be asked about, are you married? Social Security is looking to see, is there a current spouse? Your current spouse, if they wait until their own full retirement age to file for spousal payments can receive an amount equal to 1/2 of your full retirement amount. Notice I didn't say they get half your check. You get your retirement. This is an additional amount due your spouse. When your spouse files for benefits as a spouse off of your record, they must file their own retirement claim at the same time. They get the larger of the two, not both. The larger of the two. They can begin spousal payments as early as 62, just like you can your retirement payments. But of course, there's a penalty if they start early. At 62, they're only going to get 32.5%. Your current spouse cannot file for spouse payments off of your record until you file your own retirement claim. They can file their own retirement claim when they're 62 or older, but they can't get anything from you until you file your own retirement claim. Next thing you're going to be checking into, if you file early for retirement benefits and file later for spousal payments, that spousal payment will be reduced. If you file for any benefit before your full retirement age, you're locking in a reduced payment on your own retirement and the spousal record. So just be aware of that. Then people ask, well, what if I die? What about survivors? Well, your widow can receive benefits when you die. A widow, if they wait until their own full retirement age to start the survivor payment, is eligible to receive 100% of what you would have been due if you were alive that day. Now, that's kind of government speak. So I'm going to tell you in English what I just said in government. When you get ready to file your own retirement claim, you're making a decision about what you will receive today and what your surviving spouse will receive tomorrow. If you elect to start your own retirement payments before your full retirement age, you're taking a reduced payment. You are locking in a reduced payment for your surviving spouse. Your widow can get no more than you would have gotten had you continued to live and you were receiving a reduced payment. The widow can get the bonus you earn after full retirement age up to age 70, where your spouse cannot. The widow can get that increase. So if you delay taking your payments to later, the widow gets the higher amount. A widow can start payments as early as age 60 if they choose, but again, they're taking a reduction if they start early. Now, let's talk a little bit about marriage. If your widow remarries before age 60, they lose the survivor benefits. If they remarry after age 60, they keep the survivor benefits. Then a widow has a filing strategy that is not available for anyone else. Survivor payments are a death benefit, where your own retirement payment is a life benefit. You can always pick and choose between the two. You can elect to start one and wait on the other one to let it increase. And I'll give you an example. It fits my sister. My sister is a widow. Her income was always higher than her deceased husband. She is filing for survivor benefits at 63 on her deceased husband's record. So she's going to get widow benefits at 63. So she's taking payments off of the smaller Social Security record, and they will be reduced because she's taking them before her full retirement age. She is going to defer taking her own retirement payments off of her higher Social Security record until 70, so she will have earned a 24% bonus on her own retirement benefit. At 70, she's going to stop the survivor payments and start her own retirement at the higher amount and get that higher amount the rest of her life. This allows her to get 7 years worth of survivor payments that have no impact on what she'll receive the rest of her life as retirement. So you need to work with your advisors and make sure if you're eligible for survivor benefits that you consider, how do I need to file for benefits to maximize their payments? Now let's talk a little bit about benefits to divorced people. The first and most important rule: divorce must have lasted 10 years or more. If the marriage didn't last 10 years, they get nothing. So if you divorce them before 10 years, they're not eligible for benefits. If you are still alive and your ex remarries, they lose the benefits from you. To get benefits as a divorced spouse, they have to be 62 or older and not currently married. If you are dead, your widow or the divorced widow can remarry and keep the survivor benefits as long as they remarry after age 60. Benefits paid to the divorced individual have no impact on anything paid to you or anything paid to your current spouse. If you are alive and that divorced widow files for divorced spouse benefits off of your record, they have to file their own retirement claim at the same time. They get the larger of the two. So just remember, for divorce, the big rule is that the marriage had to last 10 years. If you're alive and they are currently married, they get nothing. If you're dead, they can get benefits. All right, now let's talk about some things that could impact benefits. The first one may impact some of you. This affects government employees that work for agencies that did not pay Social Security taxes. You work for an government agency and you did not pay Social Security taxes, but you qualified for a pension. There are two provisions that impact you. One is bad and the other one is awful. So we're going to start with bad. Bad is the windfall elimination provision. You'll see it abbreviated WEP, W-E-P. That's for individuals that have worked at least 10 years. They have the 40 credits under Social Security, so they qualify for a Social Security retirement payment, and they receive a government pension from an agency that they did not pay Social Security taxes, the FICA taxes, on their earnings at that government agency. Your Social Security retirement payment is determined using a modified formula that reduces your payment up to $497 per month. But you still get something off of your Social Security retirement record. The next provision is government pension offset, GPO. This applies to individuals that are receiving a government pension where they did not pay Social Security taxes and they are filing for benefits as a spouse or as a widow off of another individual's Social Security record. Those spousal payments, the 50% share, or the survivor payment, the 100% share, they're figured just like normal. Then Social Security will take 2/3 of your monthly government pension amount and subtract that dollar for dollar from anything you are due from Social Security. And frequently it makes that spousal payment or that survivor payment go to zero. You get nothing. These two provisions only apply to individuals that are receiving a government pension from an agency where they did not pay Social Security taxes on their earnings. If they did pay Social Security taxes, then neither of these apply. They get their full Social Security benefits and get their pension, no offsets. Then some of you may continue to work after you start receiving payments. There's two situations here. If you are receiving any type of Social Security payment before your full retirement age, there are restrictions on your earned income from employment. This year, the limit is $18,960. You go over that, Social Security will hold back $1 in benefits for every $2 you go over $18,960. Once you reach your full retirement age that month, so if your full retirement age is if you were born 1960 or later, once you hit 67, the work restrictions go away. You may work and earn as much as you wish, and it does not impact your Social Security benefit. It only impacts it if you're working, and only income that counts is your earned income from employment. So you're looking at W-2 wages or self-employment, income that you pay the FICA tax on. Other income has no impact on this. And once you reach your full retirement age, you're not restricted any longer. Then now that we're in tax season, let's talk a little bit about taxes. As you recall, your Social Security, your wages are taxed while you're working to fund Social Security, the FICA tax you pay while you're working. Once you start receiving Social Security payments, those payments are taxed on your federal income tax for most individuals. So I'm going to show you what it is, but I'm not the tax expert, but I just want to warn you that you may incur a tax liability once you start receiving Social Security benefits. The way you determine this is you're looking at your provisional income. So you take all your income from wages, self-employment, pensions, investments. Basically, this is your AGI off of your federal income tax. Then you add to that interest on tax-exempt bonds, other exclusions to income like foreign wages, plus half of your Social Security payments received that year, plus half of the Social Security payments made to your spouse. That number is higher than $32,000 for a joint filer or $25,000 for single, then you will pay federal income tax on a portion of your Social Security benefits. If it's higher than $44,000 for joint or $34,000 for single, then you will pay federal income tax on 85% of the Social Security benefits received that year. This is taxed as ordinary income at whatever tax bracket you fall into. You will get a 1099 from Social Security each year. Just remember that, because you'll need to add this income into your federal taxes, and you may have a tax liability because of that. Now, how do you get benefits? Well, right now, you can't do the first one. You cannot go in person to any Social Security office. They're all closed to the public. So right now, you can either contact Social Security by phone or go online and file a claim. You can file retirement claims and spouse payments online. You cannot file for survivor benefits online. If you have survivor benefits, you must do it over the phone. If for some reason there are a few reasons you might need to appear in person in an office, and if that is the case, they will make you a individual appointment and tell you how to manage that. But generally, you're going to go online or you're going to do it by phone, whatever works best for you. Remember, Social Security is just a piece of your retirement plan. Social Security employees do not provide financial guidance. So you need to meet with your advisors before you contact Social Security so you know exactly what you want to do with your Social Security benefit so it can fit in the picture with your investments, your pensions, your savings, all your annuities, your life insurance, all your other resources. So, what kind of questions y'all have? And I think there were some I saw strolling in. So, Simon, if you want to help me out with the chat box, tell me what's there, and we'll try to answer questions for a little bit. If you have a question, you'll type it into the chat box. If you have a question afterwards, if you will send it to Preston, he can track us down and we'll find you an answer.
Excellent. Thank you very much, Jody. And there are quite a few questions here. We'll start off with the questions in the Q&A section, and then we'll move into the chat. The first question that rolled in is regarding spouse. It says, what if the spouse is getting disability payments? Should he wait until full retirement age?
If they're getting disability payments now, they're getting disability on their own record. That disability payment is their full retirement amount. When they reach their full retirement age, they will automatically convert from disability payments to retirement payments with no change in the monthly payment amount. If they are due more benefits as a spouse, then at 62 or any point thereafter, they can file for spouse payments and get the increase. But if they're not due more benefits, if what they're receiving on their own disability claim is higher than half of the other person's full retirement amount, then they are not due any spouse payments. So they only need to file if they are due additional money. And if you're not sure whether you are or are not, call Social Security and ask them to check.
Excellent. The next question is, how accurate is the number provided by Social Security website for benefit amounts? They need to know for budget projections and planning.
It's reasonably accurate. It depends on how far you are away from your full retirement age. If you're 40 years old, it's a real shaky number. If you're 60 years old, it's going to be pretty close.
Excellent. The next question is, on the divorce, will the ex-spouse need to be drawing before the primary can draw from him?
No. On a divorced spouse, if the worker is at least 62 years old where they could file a retirement claim, the divorced individual can file for divorced spouse benefits once they reach age 62. They do not have to wait on the ex to file. The ex just has to be eligible for benefits. They don't have to actually be receiving them. And your ex will have no idea that you filed for benefits because it doesn't affect them, and so it doesn't matter.
And there's a follow-up question to that. The question is, what percent do I get from my ex? And what if there are two ex-wives?
The most you can get is 50% of their full retirement age if you wait to your full retirement age. If you start at 62, you're getting 32.5%. And if there are multiple ex-wives, everybody gets the same. One does not affect the other one.
Excellent. This question here is for the spousal benefits. And I believe the person did not completely understand your statement there. They stated that if retired husband starts receiving Social Security at age 65, from about 66, assuming that their full retirement age is 66 and 4 months, the person is stating that they retire at 63 years old. Can I get spousal benefits? And if so, at what percentage? And herefore wait to claim my own benefits?
First, you cannot wait to claim your own benefits. When you file for spouse payments, you must file your own retirement claim at the same time. If you start spousal payments at 62, you will get 32.5% of the worker's full retirement amount. It doesn't matter when they filed or what they're getting. Your payment is based off of half of their full retirement amount, and it is reduced if you start your own payments prior to your full retirement age.
Awesome. So a question here is about, the question states, if my mother, who worked for a school district and contributed to the school system, the retirement system of the school district, so they did not pay into Social Security, can the mother receive spousal Social Security benefits from her husband?
Maybe. The spousal benefits would be determined just like normal. Then they will take 2/3 of the mother's teacher's pension amount monthly, whatever her monthly check is, and subtract that dollar for dollar from anything she's due off that Social Security record. And most of the time, it's going to make that Social Security record turn into zero. For instance, if the benefit she's due as a spouse is $1,200 a month. Well, if she's getting $3,000 a month as a teacher's pension, 2/3 of that is $2,000. So $2,000 from the $1,200 due off Social Security makes the number zero. You get nothing. So it just depends on how much the teacher's pension is and how much the spousal payment would be. But it is a dollar for dollar offset.
Excellent answer. So Jody, this question here is, and I believe you might have answered this in another form. The person states, how can I find out if my ex-husband is drawing Social Security? He is 5 years older than I am and eligible. And how do I go about applying for the spouse, the ex benefit?
The divorce spouse benefit. First thing, you don't have to find out if he's drawing benefits. If he's 62 or older, he's eligible to draw. So once you turn 62, you can file for benefits on his record. He doesn't have to file, so it doesn't matter what he does. All you need to do is you can either call Social Security and make an appointment to file for divorce spouse benefits, or you can go online and click that you're going to file for spousal payments and fill out the application online. You don't have to contact him. You don't have to know anything about him other than his name and birthday, and it would be helpful if you know his Social Security number.
Jody, if you don't mind, can you go back to the slide that has the ages and the full retirement age? There are a few questions in here that are referenced in that slide.
Sure. Give me a second here. Let's make this go back to that one. I'll show current. That one?
Yes, sir. And if you could leave it on this slide for a few moments here, but there are a few other questions here. It says,
well, let's answer another one.
This just answered that exactly. It says I was widowed at 51. I currently make $85,000, and I am 57 years old. We were married for 30 years. Can I draw on his Social Security? My children are over 18 years old.
If you are, did you say she was 57.57?
She's currently 57.
Well, she cannot draw anything off of his record until she's 60. The earliest she can get survivor benefits is 60. And with that type of income, remember, if she earns over $18,960, Social Security is going to pull back $1 in benefits for every $2 she makes. She's going to be over 30,000 over the limit, so she's probably not going to be eligible for any benefits until her employment income is either reduced or she reaches her full retirement age, because then the income doesn't count. But if she's 57, her full retirement age will be 67.
Excellent. So the next question here is, my husband started drawing at 62 and a half. He's still working. Can I file on his Social Security now at age 64 and while I'm still working?
Yes, but again, depending on the amount of your earnings, you may not get all of your benefits. You can always file, but if you're under full retirement age and working, you can't earn $18,960, and then Social Security start pulling payments back. So depending on how much you're earning and how much your spousal payment is, you may not be doing any benefits. And also, you cannot file for spousal payments off of his record without filing your own retirement claim, and you will get the larger of the two, and you don't get to pick and choose.
Awesome.
So chances are, if you're working, that I would suspect that your own retirement is higher than the 50% share you're due off of his record. But both of those will be impacted if you are working and you have not reached your full retirement age.
Excellent. So there's another question here, and there's a few repeating questions, so I'll skip over those. However, there's a question in the chat that is asking, can you please go over the taxes on Social Security one more time?
Sure. Let's see. Let me go to that page. Going the wrong way. I thought that didn't look good.
I think you have 2 more slides.
There we go.
There you go.
So, you're looking for provisional income. So you take all of your income from wages, self-employment, pensions, and investments. This is basically your adjusted gross income on your federal income tax, plus any non-reportable income, which is tax-exempt bonds, plus exclusions income, and this is things like foreign work. That's not going to be a common one. Plus half of your Social Security benefits, plus half of your spouse's Social Security benefits. So you add all those amounts up. And if it's higher than $32,000 for someone filing joint or $25,000 for someone filing single, then you have a federal tax liability. If it's higher than $44,000 for joint or $34,000 for single, then you will owe federal income tax on 85% of the Social Security benefits you received, and it's taxed as ordinary income in whatever tax bracket you fall into.
Thank you for that, Jody. There's still a few questions in here in the chat, and so I'll go over them as quickly as we can. And everyone on the line, if we're not able to get to your question, please feel free to email Preston Ivey, and he will be able to get the answer to your question. So I apologize if I do not get to your question before the time is up. But the next question is regarding Medicare. It says, is there a specific age you should apply for Medicare? Is there a specific age you should apply for Medicare?
You're eligible for Medicare at 65. If you are already signed up for Social Security benefits at 65, you will automatically be enrolled in Medicare. If you are not signed up for benefits, 3 months before you're 65, you need to contact Social Security and file a claim for Medicare benefits.
Awesome. The next question is, my father just passed and my mom gets Social Security right now. What is my mom able to receive from his death in terms of a benefit?
When you look at the benefits, you will need to know how much your father was receiving and how much your mother receives every month, and she will get the larger of the two. So if what he was receiving is larger than what she is, she will change to survivor benefits on his record, and her own retirement payment will stop. If her retirement payment is larger than what he was receiving, then she's not eligible for survivor benefits. She gets her own. And that brings up an important point that y'all need to plan for. If you have a married couple like this and you're both receiving Social Security payments, when one of you died, it doesn't matter which one, when one of you dies, the larger payment continues, the smaller payment stops. You do not get your own retirement payment and the survivor payment. It's whichever one pays the most.
Thank you. This question goes to Preston. It's regarding the recording. Excuse me. Will this recording be available for download, or where would a client be able to find out this?
Yes, so we will be sending out the we're probably Friday or Monday possibly. We will be sending out the PowerPoint as a or the presentation as a PowerPoint, but we will also have on our website access to the to this webinar. That may take a few days. It depends on how long it takes for us to get it and get it approved by our compliance department and things of that sort. But all that should be done fairly quickly.
Excellent. Thank you for that. Questions for you, Jody. Actually, this question is for you, Preston.
Okay.
What can you please give us your contact information to get a hold of you for a one-on-one meeting?
Sure, of course. My direct dial phone number is 757, of course, 886-3344. Again, that's 757-886-3344. And I work with two other advisors here, Frank Nicky and Albert Haskins, and one of the three of us will reach out to you and set up an appointment to go over, whatever you're looking to go over, whether it's retirement planning, education planning, life insurance, the whole 9 yards, annuities, income produced in retirement, etc. So
Excellent.
be glad to take care of it.
And so I believe everyone that did sign up with an email should be receiving a follow-up email. If you did register with an email, they will be following up with you with their direct contact information and website as well, because I know a lot of people are asking for the website as well for this recording. There are a few more questions here. I want to go through it while we still have Jody on the line. Jody, this question is, if you take Social Security early and still working, making above the allowed limit, will you get the money held once you reach your full benefit age?
No, once you reach your full retirement age, there are no more penalties for making over the limit. You get your full payment with no offsets.
Excellent. And another question here is, I plan to stop working at the end of this year, December 31st, 2021. I turned 62 in January 2022. Will I be penalized? I'm guessing if they start taking Social Security.
Your benefits will be reduced because you're not at full retirement age, but your work from the prior year won't have any impact. Only thing that would impact it is if you continue working in 2022.
Okay. The next question is, if you are CSRS, offset, and Social Security, who and how is the offset amount calculated from the government pension check?
I don't know that answer. You need to talk to the personnel department of the agency you retire from or the Office of Personnel Management. Social Security does not determine that payment.
The next question is, if my full retirement age is 67 and I decide to keep working until 70 and receive benefits instead of delaying, I'm guessing they're trying to ask, can they take Social Security at 67 or can they delay it till 70?
They can take it at any time they want to after age 62. So if their full retirement age is 67, their work will have no impact on any benefits going forward. So at any point after 67, they can start their payments and their work won't affect them at all.
Awesome. There's a question in here that says, for clarity, if I wait until I turn 66 and a half or 66.6, I can draw benefits. Can I draw benefits from two ex-husbands?
No, you can draw from whichever one pays you the most. But you had to be married to that one for at least 10 years.
If my full retirement age is 67 and I decide to keep working until 70 and receive benefits, say 24,000 a year, instead of delayed return credits, will I recoup the 72,000 that I received by waiting for delayed retirement credits?
If you live long enough, you would. But you'd have to do the math and figure out how much your benefits would increase by waiting to 70, how much that 24% increase would be, and then how many months it would take you to get that $72,000 back. But if you live long enough, yes, you would.
The next question is, if I start drawing from my ex-spouse at age 62, can I later at age 70 change my benefits?
No, because when you start drawing from your ex-spouse at 62, you must file your own retirement claim at the same time. You cannot start one and delay the other one. The only time you can do that is if you're eligible for survivor benefits. So if your ex is dead, you can do that. But if they're alive and you file for spouse payments or divorce spouse payments, you must file your own retirement claim at the same time. You can't take one and delay the other one.
Okay. This question, again, there must be a lot of school system employees on the line. It says, if you work in the school system part-time for 30 years and just went full-time for the last 3 to 4 years, am I eligible to draw Social Security benefits? And if so, how much?
Well, the how much is, I don't know, because I don't know how much you worked and earned. It's not like remember, Social Security is looking at 35 years worth of work. And also with that school system, did you pay Social Security taxes while you were working? If you didn't, you're not due any benefits. You had to pay Social Security taxes. You maybe do a teacher's pension, but you may not be due any Social Security benefits.
Can you, one more time, I believe this will be the last question. Can you go over the widow benefits again one more time, please? The widow
Sure.
benefits.
A widow is due if they wait to their full retirement age to start the survivor payments, they are due what the dead person would have received if they had been alive that month. A widow can start payments as early as age 60, but they only get 71.5% because if they start payments before their full retirement age, they're penalized. The benefits are reduced. There is
Excellent.
no benefit to waiting after full retirement age for the survivor benefits. It does not grow any past full retirement age. You have the option to start the survivor payments and delay your own retirement payments to later. That's the only one you can do that to, and let it grow. And if it's more, you can switch over. But you need to make an appointment with Preston and let him look at what you can get as a survivor and what you're doing in your own retirement so you can figure out what way is best for you to do this.
Thank you very much, Jody. Preston, any last words before we close the meeting?
Just wanted to thank you guys both for your time and expertise. Also want to thank everybody on the call. I know there was a lot of things going on this evening that you could have been doing instead of this, and I hope that you found it helpful. Please feel free to give us a call, shoot us an email, and set up a one-on-one with either myself, Albert, or Frank, and we will do our best to put you in a better position tomorrow than you are today. Again, my direct dial number is 757-886-3344, 757-886-3344, and we will get in touch with you as soon as possible to set that appointment. Again, the PowerPoint should go out tomorrow or tomorrow or Monday, and the whole entire presentation will be out as quickly as possible. Again, thank you very much for all your time. We'll go ahead and wrap things up and look forward to hearing from you individually. Jody, Simon, thank you very much again for your time.
You're welcome.
Thank you very much, Preston.
One other thing I would like to do real quick. I was remiss in doing this earlier today. I would like to thank Aislinn. She is a member of our team as well, and without her, this would not have been possible. So thank you, Aislinn. I appreciate all your time and effort and working with Simon to get this taken care of. You always do a fabulous job, and I'm going to, again, thank you publicly for all you do. But again, we'll go ahead and wrap things up. Simon, Jody, if you have anything else, we'll wrap it up.
No, sir.
If you can see the chat box, Preston's contact information and email are in there as we speak. Again, in the chat box, you should see his phone number and his email address. So please take that down if you can, and we'll be wrapping up here in just about 30 seconds. Again, thank you all for joining us.